So tell us right now, Philip, what sort of conversations are you having right now with those asset class owners, landlords and tenants?
Sure. So it's obviously been a very interesting year because, as you rightly mentioned, there's been significant disruption due to COVID. But if I can perhaps just put the present in context by just talking about what was happening before COVID kicked off. If you go back to January, February of this year, we had a situation where occupancy levels of student accommodation were the highest they've ever been. And when we talk student accommodation and occupancy levels, typically we're talking 97, 98% occupancy in term time, in the main letting period, which might be 44 weeks perhaps, and then the separate arrangements for the summer holidays. So we had very high occupancy levels right across the sector. We also had good rental growth, RPI, inflation beating rental growth, which has been consistent over the last 15, 20 years or so. And we also had very strong investor demand and very strong global investor demand. So we've had a lot of interest from sovereign wealth funds, from global pension funds, and actually, interestingly, some of the first people to be involved in the sector were the private equity funds, and they're still very involved. The difference from now and 10, 15 years ago is that the pension funds are much more comfortable with the sector because they understand it better, because they've seen transactions of scale across the globe, and particularly in the US, the UK, and Australia, and increasingly in mainland Europe. So go back to January, February, there was a feeling of, great, there's been an election, no matter what your politics are, the key feeling was, thank goodness, we've got over that Brexit chaos, at least for now. We also had significant disruption following the tragic Grenfell fire, because a lot of student housing developments had cladding, which there were question marks on. And even just getting testing for your cladding was very challenging. It's taking a long time for people to get proper testing done on their cladding. So a lot of transactions that might have happened didn't happen. And then Brexit definitely slowed down the market, and a lot of people were sitting on their hands. A lot of people who might have been taking a portfolio to market or might have been purchasing. But notwithstanding that, if you go back to January, February, we had seen a pretty decent level of transactions the previous year, 2019. We'd seen about £3.5 billion of transactions, possibly 4 billion. And then as we got into the early part of this year, things were looking really very solid. And as we got to the point of the national lockdown, so in mid-March, we actually had one of the biggest transactions the sector has ever seen. We had a £4.7 billion acquisition by US private equity house Blackstone of the IQ student housing portfolio, which was a substantial portfolio of purpose-built student accommodation across the UK. And that was at record levels, record pricing, and clearly it was one of the largest transactions as well. So that closed about 2 days before the national lockdown started. And as soon as the national lockdown started, everybody began to think, what on earth is going to happen with students and the universities? Are the universities going to shut, or what's going to happen? So we very quickly got into a position where students and universities were in a fairly heated dialogue about where they're going to receive refunds if they had booked accommodation, because the universities were effectively shut. Across the UK and Europe, most universities were shutting and students were not on campus. Universities were a bit slow in deciding what they were going to do. One of the biggest private operators in the UK, a company called Unite Group, were the first to make a major statement that they would offer a refund to students who had paid in advance for accommodation, and that they would let those who had paid and who were coming into accommodation but no longer needed it, they could go home and not have to pay for it. Most of the other operators followed suit, although they each offered their own version of the refund package. And I think actually it was to some extent a coming of age of the sector. The sector was behaving responsibly. It knew that there was a crisis for students, and it felt that it wanted to keep a good long-term relationship both with the universities and with students. And I think it shows that the student housing sector, certainly the purpose-built student housing sector, is really now part of a bigger hospitality sector rather than just being bricks and mortar. Here's your room and we'll see you in a year's time. The operation and the management of those halls of residence is very much a key part of what creates the value of these portfolios. And I can tell you from my experience, they are extremely well managed. People sometimes often say, oh, students, you don't want to be near a student hall of residence, it'd be awful. Well, actually, the students are really hardworking. And I know there's a lot in the press at the moment about abuses, if you like, of the current local lockdowns. But the students are much more responsible than when I was a student, let me put it that way, back in the 80s. So I think what is quite extraordinary is how the operators responded, and the operators have been pretty flexible about the current levels of demand and occupancy and students' requests to have refunds. What we have seen now is that the universities have largely opened again. Students have gone back, but we are, of course, conscious that it is something of a hybrid experience at the moment. Hybrid in the sense that there's online teaching and some face-to-face teaching, and in some universities that face-to-face teaching is minimal. And so there are discussions, and of course it's in the press daily at the moment, about where the students are being properly looked after. Are they being managed? Should they be sent home? Are they a threat in terms of the COVID spreading, etc.? But what we have seen this year is an ongoing confidence from investors. We've got a number of student housing portfolios that we will be taking to market shortly. And there is really strong investor interest. The view is that student housing is not like the rest of the hospitality sector. If you look at hotel sector, they are having an existential crisis. We don't have that in student housing as a sector at the moment. We've got organizations, operators who are backed by investors with very deep pockets. These are pension funds, these are sovereign wealth funds, global institutions. They are taking a long-term view. They've recognized that there's going to be a loss of some income in the interim, and I think for the next 6 months there'll probably be further losses of income, possibly even through to 12 months. The hope at the moment is that come next September, that's September 2021, there will be a degree of normality. But of course, as you and I know, who knows? It depends obviously on what happens with the vaccine.
You've mentioned so much there, and I want to deep dive into loads of that, Philip. So I want to break some of that down into components and get a conversation going with you. I hope you enjoyed that, and don't forget to subscribe. We'll see you soon. Thank you.